Good morning, guys, and welcome to the Camp Financial Stock Market Update. Today is February 22nd. Let's go ahead and take a look at the performance for the last week. Top performers, Bank of America up about 6%. As you know, that is one that we currently hold. Cisco Networks up 6.75%. Home Depot and Lowe's up about 4.5%, Home Depot about 3.7%, McKesson up 7.4%, Walmart interestingly up 5.4%. Let's see, we've got the auto GM up 6.5%, Under Armour up about 5.6%. See who else we've got in here. Mylan up 6.33%, Mallinckrodt up 8.9%, DaVita Health up 6.3%. So that kind of gives us an idea. So we've got a pretty broad spectrum, right, of companies that have been up pretty strong over the last week. We even got Boeing over there up 4.5%. Clorox, Kimberly-Clark up 8 and 9% respectively. A lot of that was driven by the original thought that the purchase was going to go through. Kraft Heinz was looking to buy Unilever, which would have helped, obviously, that sector, Unilever being a member of the personal product group. That's fallen through, but Clorox and Kimberly-Clark, Procter & Gamble, all these companies have still seen some pretty good upside, just because now there obviously is some interest in purchasing within that sector. So those other companies in that sector are still gonna feel the benefit of a takeover proposed on someone else within that group. Now let's take a look. Really we've got one sector only that's down. There's a lot of flat sectors and sectors that haven't moved much. But I really only see one area that's down, and that's the basic materials. So we've got the majors, they're both down, Exxon and Chevron. In the independent oil and gas base, we do own ConocoPhillips. It's down 3.16%, and really pretty much looks like we're pretty much down across the board. There's 4 positive companies within there: Marathon Oil, Murphy, Hess, and one actually that I'm not even sure which one that is, NFX, Newfield Exploration. So independent oil and gas is pretty much all down. The oil and gas equipment and servicing groups, Schlumberger, Halliburton, pretty much all down this week. Major diversified chemicals is mixed. Dow's down a little bit, but Praxair is up. Let's see what else we got there. Air Products is up. Eastman Chemical is up. And then FMC is down about 1.5%. So chemicals pretty mixed. But with the major company in there being down, that makes the sector as a whole, look a little bit worse. So then we got oil and gas pipelines. The 4 majors are all down. Agricultural chemicals, Monsanto is up, but the rest are down. As a matter of fact, CF Industries is down almost 7%, so rough week for them. In the copper sector, you got Freeport-McMoran down about 11.5. Aluminum, Alcoa is down about 4.5. And specialty chemicals is the one area where we've got positive across the industry within the basic materials sector. So that kind of gives us a rundown for the last week. I did see Newmont mining was up about 0.16%. So that gives us a rundown of what's been going on over the last week within the stock market. Again, Bank of America and the banks still just continuing to drive higher. Let's pop into our systems here real quick, take a look, see how they're performing in February. So the S&P is up about 3.8% so far this month. Our technical trading system is about 3.42%. Our undervalued purchases is up about 4.01% versus the S&P at 3.8, Dow at 4.42, and the NASDAQ at 4.47. So right in the middle there. And let's take a look at our oldest running system. Let's get this over. There we go. Our quantitative, fundamental, and technical. It kind of brings them all together. And that one is up 2.91% this month. It's got two purchases in there were just made this month, so they're going to obviously skew it down a little bit. But as far as a whole, they've so far this year they've all performed pretty well. And we've got 6.5% in the quantitative and the Quantifunda Techna. The undervalued is up. Let's see if I can. Well, let me edit it on here. It's up a little over 6% as well. Actually, probably almost 7 now. And then our technical system is definitely the one that's lagging. January was rough for the technical system. It's up about 2.5% for the year. So, all in all three systems performing pretty well so far this year. Like Bank of America and Marriott Vacations Worldwide both hit new highs, or new recent highs yesterday. Blue Cap Reinsurance hit a new high last week on Friday. All of those companies have either just paid the dividend, Marriott Vacations Worldwide did, or have dividends on their way. So we're just slowly adding to the position. Let the dividends accumulate while the share price accumulates, and then once because eventually everything will go against you. I mean, it may be a long way off, but eventually everything will turn and trend against you, or go the opposite direction. So when they go the opposite direction, we've accumulated a decent amount of shares. We've caught the major uptrend. So then once the stock turns, it goes against us, we get out, and we still get out with a profit. I mean, that's essentially what we're trying to do here with especially the technical system, and for to a smaller degree the undervalued system. So for example, back to we talked about this in the past. Bank of America, we got in at 1571 back in September of 2016. So right now we're up just about 56%, and even if it turns today and goes against us, and it goes significantly against us, we've got a stop set at right around $20. So we're still going to get out with a 20-some% gain. Same thing with Ormat Technologies, it's up. We're gonna get out with at least 5.5%. Adtran, Blue Cap Reinsurance, both with a 4.5% guarantees. Well, I say guarantees, but that's where our stop loss is set. You know, we may lose a few other points. I mean, if it gaps down at the open, you know, we may be forced to get out a little bit lower than our stop loss, but that just kind of gives you an idea where we're trying to get out of these stocks. I mean, we've got roughly a 20% stop loss on each one of these that are held within our technical trading system, and that's, I guess that's one of the main things that I've learned as being a trader, investor, is having a stop loss in place so that you get out and you don't suffer what everyone else suffered in 2008, 2007, 2008, where the stock market goes against you and if you're just a buy and hold investor, you're just letting it go and letting it go and letting it go. I mean, yeah, you made it all back, and that's great, but I think having some discipline around your trading is what makes you a better trader, first of all. But secondly, you know, you didn't lose all your money and then gained it back. You know, if you got out on the way down, you know, once the market was down in 2007, 2008, if you got out at 20 to 30%, and then the market still retraced considerably more back to, you know, down about 50%, once that market turned and started heading back up, you know, now you've got 80% of your money that you can put back to work at 40% discount per se. So we're going to say that you didn't get back in at the bottom, which nobody's going to get in right at the bottom and out right at the top every time. But if you wrote it up and you got out 20% off the top, so you kept 80% of your maximum. Well, if you got that 80% back in when the stock market was at 60% of the max, you know, now you've gotten back in significantly, you know, been able to buy significantly more shares at that lower price because you've got an additional 20% money to put to work. So you put that to work. Well, so if you wrote it all the way down and you wrote it all the way back up, yeah, you've come out ahead. But if you got out on the way down and then got back in on the way up early enough on, you know, not only have you come out ahead, I mean, you've essentially doubled or tripled your money just since 2008. So that's why I've kind of put together, you know, some of my trading systems the way that I have is to take advantage of when the stocks are going up and being prepared and being able to get out when they're on their way down, and then being able to get back in, you know, once they've finally found a bottom and started to head back in the positive direction. You know, I could definitely, you know, with some of the systems that I use, there's definitely the ability to look at stocks to short. Me personally, I haven't done it much. I've done it a little bit. You know, I do some, mostly when I'm going short, I'm going to use options trades for the short side, just so that, you know, I may sell a call expecting that the stock's never going to hit the call, and I'm just going to capture, you know, whatever that premium is. So, you know, it's just different ways to play the stock market. You know, there's always a way to make money in the market. You just got to understand the different ways that are out there, that are available to us, that are available to you. So with that, we're going to go ahead and leave it there for today. If you have any questions, send me an email, chrism@campfinancial.net. I'd like to start putting some more user questions in here. Also, I do want to note, so if you check out my current web page, which we're going to be splitting, I'll probably be splitting the web pages pretty soon. So right now, I'm just using www.getinshapehq.com. It's kind of my blog. On there, I've been doing finance and fitness. I'm probably going to split the two out, and I may just convert strictly to finance. I love finance. Is definitely my first love. And since I'm not coaching or doing anything, I mean, I am still officiating football, but and baseball, but other than the officiating, I'm not involved in coaching, so you probably won't see much fitness related stuff on there other than just some of my personal stuff. So anyway, so what we're probably going to do is try to split those out and really focus on growing the Camp Financial brand as I transition to full-time financial advising. So if you are interested in getting some financial advice, again, you can send me an email, chrism@campfinancial.net, and we can sit down and do a one-on-one financial advice where I can actually give personalized information, personalized details for each and every person. Nobody's scenarios are exactly alike, so it's always important when you're wanting to fix your financial plan, that you sit down with someone and really get tailored advice for you. So that's it, guys. Take care, and we will see you next time.